and welcome to Next Gen Finance, an SEB podcast about sustainable finance. My name is Lina Apsheva, and today I am happy to welcome you to our 2024 year-end episode, where we will have a look at how sustainable finance has developed over this past year and discuss some expectations moving forward into 2025. To do that, I will be joined by several of my colleagues who all focus on quite different areas of sustainable finance and will provide their insights, each from a unique perspective into this market. We will hear from Karl Oskar Olming, the Head of Sustainability Strategy and Policy at SEB, from Nathalie Egenaes, the Head of Sustainability for the Corporate and Private Customer segment at SEB, from Thomas Thygesen, Head of Strategy and Equity Research and a transition expert at the bank, and from Isabelle Tibbelin, a sustainable finance advisor in SEB Debt Capital Markets. So, Karl Oskar, thank you so much for coming back on the podcast for, I think it's third time already for you.
Thanks for having me.
So you are the head of sustainability strategy and policy here at SEB, and you're also a member of the platform on sustainable finance in the EU Commission, where you represent yourself, of course, but also SEB. And you have a very unique insight into the development of regulation policy around sustainable finance. So I was going to ask you, what are your thoughts on just the development around sustainable finance and regulations around it in 2024?
Thanks, Lina. I think the starting point for 2024 is the fact that it was the super election year, or whatever it's called, and in particular, of course, the European Parliament. This meant that it was quite a vacuum in the Commission machinery, because they are not allowed to table new proposals, and since they don't have a commissioner for half a year, they are also not doing very much in terms of kind of coming up with new proposals. So from a policy perspective, this year was a little bit of a vacuum, but at the same time, we got a new parliament that shifted quite heavily to the right. We also had a lot of elections in Europe, which also tilted to the right. And I think that has had some implications on the incoming commission. So I think if I would put an overall kind of theme, I would say the last commission, it was the Green Deal through regulation. This coming commission, if I would put a sustainability name on it, it would be competitive transition, and then through delaying, deregulate, or regulate. But it's not this regulate will solve everything. I think the whole competitive aspect is much stronger now than before. So I think that's the starting point. Now, what happened this year? Still things happen, and I just recall when I was here last time, as you said, we've had these discussions for many years. I talked about a little bit about SFDR, and there will be some changes in 2024, and yeah, I mean, they were introduced, but I think the main part in 2024 is that I'm seeing almost unanimous agreement about the need to revise the SFDR, and ESMA has come out with their...
And SFDR stands for?
Sustainable Finance Disclosure Regulation. So basically what investors have to disclose in terms of their entity and also their products, so funds disclosures on sustainability. And there is this agreement that Article 8 and 9 has not really worked. It has not filled its purpose. We need to change the whole categorization, and ESMA has provided one view on this, and the EU platform came out with another view, or a similar view actually, on the 12th of December. So there's this agreement that there is an overhaul of SFDR is needed, and I think that's what we can expect for next year.
And what's your view on developments in general around the world? Do you think that it affects the developments within Europe? Or, I mean, Europe is viewed as kind of leading the way when it comes to sustainable finance regulation in general, but this election year, as you said, and the outcomes of, for example, the United States elections, is that going to affect how we treat sustainable finance here? What do you think?
Absolutely. I think Europe is integrated. Sometimes it doesn't want to be integrated with the world, but it just needs to accept that. And then how does that impact sustainable finance? Well, I think one area that is very clear is the whole kind of the competitive angle to things is being much more focused on, because before we all thought that, well, as long as we call it sustainable, things will happen by itself. But now we realize that if it's not profitable, it will not happen, and therefore you really need to look at much more than just the labeling and so on of activities. Another thing that I think is important now, as we see the results of the US elections, are the whole strategic autonomy thinking. So how can we secure the supply chains that we have in Europe, for example, raw materials, not least mining and so on, which some would argue is a part of kind of the sustainability transition, but others would say it's not sustainable. But in a bigger context, this will be more focus by the European Commission. But then I think if you come back to, we actually have a new commission in place, and we can read what they want. So if we look at their mission letters, I mean, there are a couple of things that stand out. One thing is that they really emphasize the decarbonization with economic growth. They emphasize scaling up finance to close the investment gap, but use public finance for that. I think also mitigation as a concept will stay, but resilience will be much more important. So adaptation, water and so on. I also think that there is more interest in creating markets for circular business models now. So if you have secondary products and so on, how can we really make sure that there are markets to capture the value of this going forward, and the bioeconomy and so on. So I think there is a lot here in the Commission to take the next step in a way. We also see that FISMA is much more focused now on creating a savings and investments union. So how can we mobilize the necessary capital all over Europe to make sure that there is equity capital and there is debt capital. And I think in the last couple of years, it's been a little bit of a slow market for equities and new equity, IPOs and so on. It has been quite difficult for venture capital and private equity. But now it looks like for the next year, things are going to change. And I think that's also promising, both that the Commission wants to push it, but also that the market seems to come off the ground as well.
Yeah, so that's a bit of a look into the coming years and what to expect. But did you want to elaborate more on what we should perhaps look out for?
Yeah, I think if we should go into detail, I mean, since we often talk about regulations when you and I discuss, I think we will get this SFDR proposal on new categories. Then kind of the big discussion, if you go on the street, is the omnibus. What is that? And the whole idea that has been at least aired by Ursula von der Leyen to combine the CSRD with the CSDDD with the taxonomy. So 3 big regulations, one about transparency, one about due diligence, and one about labeling what is green. And combining them together, I think that will be very interesting to follow next year. Maybe what's going to be interesting as well is it will be the first year of the EU Green Bond Standard. So getting bonds, green bonds, but through the kind of based on the regulation of the Green Bond Standard. That will be the first year, and that will be interesting. Who will be the first company to actually issue one, and what will the difficulties be?
Absolutely. Let's see if Isabelle Tibbelin, who's coming from SEB Debt Capital Markets, can maybe provide some thoughts on that when we talk to her as well. But thank you so much, Karl Oskar. Was there anything else that you maybe missed but think is important to mention?
Well, an interesting part is that the EU platform on sustainable finance is now coming to its end after a 2-year mandate. So in March it will close down, but it also means that basically from December until March a lot of reports will come out, and these reports are basically advising the Commission on the different sustainable finance regulations that are there, mainly on the taxonomy. But I think that's something to stay open for. For example, there will be a report on transition, there will be a report on simplifying the taxonomy, a new benchmark proposal for a new benchmark regulation, and then of course the work that I'm involved in heavily. So a report on capital flows in the European Union to sustainable investments. So we are trying to put numbers on how big are actually the investments into sustainable activities. Can we say anything about investments in transition? Can we say anything about how it's financed and so on? And I think that's going to be exciting to look for.
Nathalie, thank you so much for coming back on the podcast. And as a reminder to our listeners, you're the head of sustainability for corporate and private customer segment at SEB. Very exciting segment, and I know that you guys have been very busy this year, and so I was wondering if you could share with us about how the year 2024 has treated you and how it went for the C&PC unit.
Great. Thank you so much for inviting me back. It's very exciting to be here. And like I mentioned last year, it's really good to be able to get an opportunity to sort of reflect on everything that has been done. And like you said, a lot of activity has happened. And I wanted to talk a little bit about it from two product perspectives. So if we look at the investment side first, what has been very positive to see there is that we've continued growing our assets under management, and specifically growing the funds that actually have sustainability as a target. And this is interesting because as a whole in the market, in the EU, these funds have actually continued to see outflows, but within SEB, we have seen the assets under management within these products actually increase. Something that is important to note, though, is that as a part of our total assets under management, they do still remain a small portion, but it's still positive to see that they have continued growing. And I think that hopefully a part of what has resulted to that, or in that, is that we continue developing how we explain to our customers what these funds actually entail. So an example is that we have continued developing what type of data a private individual can access when they're going to make investment choices. Just logging into the internet bank, they can get information as to how this fund performs in terms of sustainability in relation to other funds that are similar in characteristics. So are they performing better or worse than other funds? And this is being looked at from a sustainability perspective. On the other hand, with green financing, we have also continued to see growth there, which is very exciting. Something that's interesting to note there is that about 40% in the growth in our green financing actually comes from our green mortgages. So a continued interest among our private individuals in the mortgage sector. And contributing to this growth in the green financing, I think that we can see a lot of new products being a result of that. So a number of products that have been launched, a couple of examples of that is our battery storage leasing product that's very, very new. Something that we also have worked on this last year is publishing or launching a green forestry loan. So it's actually green financing for certified forestry that our segment within agriculture and forestry can take part in. And apart from new developments and new launches and financing products, something that I wanted to mention is actually recapping or looking back at what I mentioned last year when I was predicting that we would focus quite a bit on our real estate segment. And that is something that we have indeed actually focused on quite a bit. What we wanted to really accomplish this year was to be able to support these clients, which are in a sector that has a big need of transitioning and is also going to face a number of regulatory requirements. And we wanted to make sure that we can support these clients in a proactive way. And a way that we have been able to do that is through actually establishing partnerships with energy consultants so that our real estate clients can now get a free of charge consultation with an energy consultant, which is going to give them much more technical advice on what they need to do, and then come back to us for guidance on how we can actually together finance and invest in that plan. Another highlight that I wanted to conclude with is something that is more related to our efforts being recognized. So something that I think we're very proud of and is very exciting to see is that we actually were ranked number 1 in Prospera, which is a benchmarking client evaluation that looks at how the banks perform in different categories. And the ranking number 1 that I'm referring to is in relation to sustainability support. So clients are asked if they perceive that their bank has supported them with their sustainability strategy. And in this category, SEB was actually number 1 for our SME segment, so the segment that we work with in CMPC. So that's very exciting to see that the efforts that we've been working on these last couple of years actually have resulted in some positive results from a client value perspective.
Yeah, and SME stands for small and medium-sized enterprise,
Exactly.
of course.
But yeah, that's to really summarize what we've focused on during 2024 and some of the highlights from what we've developed.
I was a little bit curious. Do you kind of track the interest for sustainability among private customers in Sweden or maybe in the Baltics as well? Or what is your view on how that has been developing over the past couple of years?
That's actually a really interesting question because it's something that we struggle with. We have, in numerous occasions when we've looked at developing our customer strategies, of course, been in contact with our clients to gain insights on what's important to them. And when it comes specifically to private individuals, it's clear that they think sustainability is important. But then when we look at how their actual behavior or their purchasing trends look within the financial aspect, they are not always the first to invest in sustainable funds or maybe choose products that have a sustainable focus. So what we've noticed is quite a big gap between what people say and what they intend to do and the actual resulting behavior. So this is something that we need to focus on in the coming year. How can we understand how we can bridge that gap, the intention action gap, and make it more interesting and more motivating for private individuals to actually make sustainable choices. So that's something we need to keep working with.
Very interesting. And speaking of the coming year, do you have any views on what we can expect from 2025?
Yeah, so the last couple of years have been focused on developing our offering, coming out with new products and services in collaboration with partnerships. And I think these coming months ahead will be more focused on getting those products and offerings out. So how can we, like I just mentioned, clarify the value and create even clearer incentives for both our private and corporate customers to actually invest in sustainable finance products or use green financing. And another thing that we need to work on with that is actually simplifying the processes so that it's easy to make these choices. So there will be a lot of focus in ensuring that our advisors can really get the message out, they can get these products out, and of course for us to also work with how we can make these processes even more efficient. I think that another aspect that we will focus on quite a bit is related to helping our corporate customers be prepared for what's coming from a regulatory sense. We have smaller and medium-sized enterprises in our segment, and they're corporates that don't necessarily have reporting regulations yet, but they are often suppliers to larger corporations that do have these requirements, so they will be impacted regardless. And I think that that's something that we need to focus on. How can we make sure that they are well prepared, that they can actually use their efforts as a competitive advantage? And to do that, we need to be proactive in our advisory and even in our product offering. So I think that will be another focus area for us to look at. And then from a little bit more of a long term, I'm maybe not sure if we'll see an effect during 2025, but it will definitely be something that we will be working with and looking at. It is to continue getting insights and learning from our customers so that we can get a better understanding of how we best support them when we are shifting from a linear to a circular economy. So even from a retail perspective and a smaller corporate perspective, how can we make sure that we have the best offering possible to meet those needs, and hopefully in the coming years have a strong offering to enable that.
Thank you so much, Nathalie, again for joining me once again on the podcast and for sharing your insights, and happy holidays.
Thank you, Lina. Thank you for having me.
Isabelle, thank you so much for joining me in the studio and making some time for me. So you work as a sustainable finance advisor in our Debt Capital Markets unit, meaning that you advise our large corporate and financial institution clients on debt financing. So I was wondering if you could take us through 2024 from the perspective of the sustainable finance market on the debt side. How did it go for you guys?
First of all, thank you, Lina, and thanks for having me. It feels super nice to be back in the podcast again. If I'm going to share a little bit about the highlights for 2024, when we look now at the statistics from January to end of November, we can see that the share of sustainable bonds on the global market, we can see that the number is still quite low, actually. It's around roughly 3%, more or less. But if we look in Europe in general, we can see that it's the second best year for sustainable finance and sustainable bonds, really, which is really, that makes me glad to see. And that is mainly, we had 2021, which was the record year in Europe, and that was mainly due to COVID pandemic, which made the EU and many European countries to issue social bonds, in particular related to COVID. But it's the second best year, as we can see in Europe as of now. Let's see if December keeps that or if something else happens. But if we zoom in the Nordic perspective and in the Nordic market, we can see that the share of sustainable bonds is actually quite high. It's 14% of the total market for bonds. And actually, it's the record best year so far since we have started with sustainable bonds. So that is also nice to see that the momentum in the Nordics is really positive.
Yeah, that's really great to hear, and congrats. Sounds like there's been a lot of positive developments despite the, continuous, maybe not as high numbers globally. But you work on so many exciting projects with very exciting companies, and I was wondering, are there any transactions that stand out maybe from 2024 that you'd like to share with us?
There has been a very good year for the sustainable or the bond market really in general. So I think the sustainable bond market has been driven just because of the overall momentum, of course. So that is just good to highlight. When we look at specific transaction or perhaps frameworks, we can see that there is still a lot of green bonds out there in the market, and they have the overall share. Basically, they are outstanding compared to the other type of sustainable bonds. But I thought I would highlight two examples in this podcast today, Lina, because you know that I'm really into the real estate sector. And we had the opportunity earlier this year to collaborate with Rikshem on a sustainability-linked bond framework. And what I like with this framework is that we know that the real estate sector have challenges when it comes to the climate transition, and especially to build climate neutral buildings. But what Rikshem did in connection with addressing one KPI for reduced climate impact, they have also added two social KPIs into the picture.
And KPIs are, of course, key performance indicators that are used to measure the performance of the company.
Yes, thank you for clarifying that. What they did was really to look at both safe neighborhoods. So how could you make sure that you as a company make the best out of your neighborhoods in order to make the ones that are living in the buildings that you own and operate in feel that they have a sense of belonging and also feel safe when they go back and forth to their homes, basically. And then they had another KPI, which is the increased commitment for sustainable supply chains. And I think that is also quite interesting because we know that the real estate sector in general have problems when it comes to labor rights and labor conditions in the construction phase of new buildings. So here, Rikshem really wanted to make a statement that they want to make sure that all their suppliers in their value chain actually live up to their code of conduct in that sense. So, and I also think it's nice to see some more social elements into sustainable finance as well.
Absolutely. Yeah, sounds super interesting.
Yes, but then of course another framework that I want to highlight that we also worked upon previous this year was the SSAB case that we had. Because for those of you that are listening, SSAB is really a large steel maker and steel producer here in Sweden. And as many of you know, this sector has tremendously challenges to transition to a low carbon future. And that is what makes this framework so interesting, because this framework really sort of illustrates how SSAB will transform to a fossil-free steelmaking and how they will invest going forward in more efficient and flexible production systems. So that is really showcasing their pathway towards the Paris alignment and to make fossil-free steel. So it's also interesting to see that in their not only the green use of proceeds categories, but also in their sustainability linked part of the framework, they also commits to reduce their scope 1, 2, and 3 emissions according to Science Based Targets Initiative. So that was really a cool project to see.
Very cool. And I had no doubt that you would have some very exciting examples for us, and you definitely did not disappoint. And now I'm wondering, what are your expectations for 2025? You mentioned social, perhaps, and still not as big as green, but maybe some other themes or angles to look out for in the coming year.
Yes, I think if we're just looking what is coming really close near term, we have this EU Green Bond Standard that will actually start to apply the 21st of December. So actually quite soon in time. And I do believe that we will see some issuers making it to the forefront and will, if not maybe before Christmas, but at least in the very early beginning of next year, try to utilize this new regulation and standard to come to the market. And that, of course, alludes and make the case for the EU taxonomy even more concrete than ever before, since the EU Green Bond Standard really means that you should follow the EU taxonomy in your use of proceeds when you issue the bond. So I think we will see a lot of things going around with that regulation, and I think that will impact the markets, even though we see that some sectors might struggle. So this regulation would probably be more forward-leaning in some sectors than in others.
I'm glad you mentioned the EU Green Bond Standard. I promised Karl Oskar actually that I was gonna talk to you about it, and I didn't even have to ask you. You just went into it all by yourself.
No, but it's I mean, it will for sure have an impact on the sector, and we have a lot of dialogues with issuers right now as well on the topic. So it will be very interesting to see who will be the first one within Europe to actually commit to this standard. So yeah, it's really on, I think, on everyone's mind, at least for those who are nerds within sustainable finance these days. Other than that, I think one topic which I think we should bear in mind and have a closer look at in 2025 is also climate transition. Because we can see now that the EU is starting to look after the sustainable finance disclosure regulation and maybe try to do some kind of tweaks, because they have realized that the concept with Article 8 and 9 funds maybe hasn't been going in the way that they wanted with the regulation, basically. So what we have seen now is basically that they are formulating sustainable funds and transition funds. And I think that will open up for more transition investments within Europe. And I also do think that we will see more methodologies around the concept of transition. So that is also something which I think and hope we will see more of in 2025.
Really great and a lot to look forward to. Thank you so much, Isabelle, for coming back on the podcast and sharing some of your thoughts. Thomas, so you are closely following the energy transition and the way its course changes over the years. So what's your view on 2024 and where do we stand this year?
Well, if you look at the clean energy transition, it still seems to follow the same exponential path that you've seen in earlier technology revolutions. Obviously, this is very encouraging because it means we are still moving relatively fast towards the end goal of decarbonizing our entire economy. However, if you look at the speed of the transition, well, the tricky part about this technology revolution is that we do not have unlimited amounts of time. It does have to be a bit faster, even faster than the computer revolution was. So while I continue to feel encouraged, I can see all the exponential curves. The S-curve is happening, but I'm not sure whether it's fast enough to complete the journey by 2050. If we get there by 2050, it will be twice as fast as the computer spread through society. That's not going to be easy, and that's why I think we do have some political considerations. When we look ahead to 2025, there's going to be some interesting decisions being made. And of course, we're hoping that they will accelerate the path. But if you look to some of the recent elections in the world, well, it's not obvious that all of them will work in that direction.
Definitely, and I appreciate you bringing up the political side and in general the fact that geopolitics and different events in society affect the pace of the transition. And of course, it is all about the pace, and that's where a lot of the not unreasonable worries come into play, where, activists and scientists and even regular people raising their voice and worries about how fast can we actually go in order to get where we need to get to not or to prevent the catastrophic effects of climate change. But if we go back to the question of politics, we have recently had the very big elections in the United States. And of course, one of the big questions that arises there is how much is it going to affect the pace of the transition? So what is your view on that?
It will slow it down. There's no doubt about it. With you remove subsidies, you will revert to something that looks more like earlier technology cycles. The transition does take some time if you don't push it, because the replacement cycle, when you look at the deep infrastructure projects that we get our energy from, you don't replace them every year. Some of them last more than 50 years. So unless you push it, unless you're willing to pay the private actors to phase out something that might be profitable for a while longer, then it's going to be difficult. And it's clear from what Mr. Trump has said before he was elected president again, that he has some reservations. I think this is really at the core of the political problem we're talking about, Lina, that if you look at the voters in the United States, well, there are a lot of people who, like you just explained, understand the risks that are involved, feel very strongly committed to the idea of accelerating this. But there are also very large voter groups who do not buy into this argument, who kind of push back against it, and who feel that they're being pushed into things that ultimately may not benefit them. I think this is the big political challenge ahead of us. In some way, we have missed the opportunity to explain to these voters that the clean energy transition is a gift from the gods of technology, you could say. It's something that will make everybody better off. You're going to pay so little for energy once we're done with all of this. It will require a lot of investments while we do it, but the payoff from that investment, everybody gets to benefit. I think that's been an undersold story. I think it's when you look at the campaign in the US, the field was too open for those who do not wish to admit that we have a pressing issue. And maybe we're not selling the other story well enough so that people feel it, that this is something they really should long for and not be afraid of.
I couldn't agree more. And I think it's such an important point that we don't pay enough attention to the messaging that we're using in order to push the transition forward. Who would have thought that one of the challenges of the energy transition is the marketing side, right?
I think this is important because if you feel strongly and you understand how serious the risks are for the planet, whether it's going to remain inhabitable, it is obviously understandable that you push very aggressively to sell that view. But it is also important for those who do not embrace that view to start with. And those arguments are maybe not the ones that will convince them. Maybe we also have to think a little bit about making sure that there are no big losers in this game. Like we will go back to globalization. It turned out that we left some big population groups behind that didn't benefit from something that otherwise was good for the planet. So I think we've left with some question marks in many different areas. You can wonder why it was such a clear-cut victory for the Republicans in the United States. But when it comes to the climate discussion, I think it just highlights a problem you can sense in Europe as well. We need to get to the point where you get more votes if you promise people that you will give them cheaper, better, cleaner energy faster. And right now, I have a feeling that that's not the way that it works. So it's a big challenge for all of us who work with this kind of analysis also to explain the happy message that, in fact, behind all of this climate discussion, there is a fantastic technology revolution going on. And if you accelerate it, you're just going to get to the good things faster. That's one of the big things for 2025. And obviously, we do not know yet what exactly Mr. Trump is going to do. The analysis we've done, and you can find that in the new Green Bond report as well, suggests that it is going to be relatively limited because a lot of the IRA, for instance, is about industrial policy that fits well with Mr. Trump's geopolitical agenda. They want those factories back. They want to control the supply chains. I think our estimate is that when you take away the parts of the IRA that you can't just take away and that will not be politically supported to take away from Republican lawmakers as well, it will be a decline of around 15% in the total amount of stimulus or subsidy you get from the IRA. That's not a disaster. Most of the package, 85%, is still out there to accelerate the U.S. clean energy transition. But as we started out talking about, time is already running out. Everything you remove could make a difference because we should actually be adding policy measures. So if you're already falling short, you start chipping away at some of the more important measures out there, then the risk of becoming too late just goes up. It is a problem, but this is something you have to say carefully these days, but it's not the end of the world. And it's definitely not the end of the transition. It will continue. And we just have to hope that there are political leaders in other parts of the world who will compensate or maybe step in and add measures to accelerate the scaling of the new technologies, for instance, in Europe, to compensate for what they do in the US.
Definitely a lot of ground for worrying, but at the same time, I really appreciate the message that you have also consistently communicated and saying that the transition has passed its tipping point. It's not going to turn back, it's going to continue. And that is at least one positive that we can look out for.
Well, I think the other important part is, if you ask me as an economist, and having spent a lot of time understanding how technology revolutions can change the fate of big nations in the past, I think this is a major policy mistake. I mean, in the US case, it will not make the US greater again that you slow down the transition to a new and much superior technology. Ultimately, it could put the US a step behind. If you look 10 to 20 years ahead, if you're not scaling it, you're going to be falling behind the competitors who are doing it. So I hope that we here in Europe maybe can look at this differently. We have a chance to turn the clean energy transition into a competitive advantage. It just requires that we're willing to scale our local market faster and do a little bit to protect the local producers so that they get to benefit. I believe that after a few years, it will be clear that if you slow this down, you're going to be a competitive loser in the new geopolitical economic arms race we're in. But it will take a while, I guess, before the American voters get a chance to maybe rectify some of the decisions they just made here in November. This is one of those big things, those big revolutions that can improve the standard of living for everybody on the planet. And maybe that's the messaging we need to get out now. When we change the tone of this, it's important to stay enthusiastic. This is powerful technology stuff we are dealing with. It will happen, and we can make it happen faster. But it only happens, in my view, if we start selling this as something that you should rejoice to get and not something that you should fear.
Absolutely. Thanks again, Thomas.
Thank you.
So thanks to all of our guests for joining me today for this special year-end episode, and thanks as always to you, our listener. Whether you have been listening during the whole year or if this is the first episode you're ever tuning into, I'm still very grateful for you being with us. And if you like this podcast, please feel free to leave a review and make sure to subscribe or add the podcast to your favorites, depending on which app you listen to us on. And this way you can make sure to stay updated when new episodes are published. But that was it for today. Thank you again for tuning in, and I'm wishing you a very happy holiday season ahead. Take care and goodbye.